Welcome back to this Indianomics special, the debt squeeze. On a Tuesday, the State Bank of India made a dramatic announcement saying that it is willing to buy 3 times the number of NBFC loans than it had originally set forth for the current year. It said it is willing to buy 40,000 crore worth of loans. Other bankers we spoke to also said they are willing to buy loans from NBFCs, but no banker told us that they are willing to give more loans to NBFCs. So the illiquidity that the NBFCs face continues, and the mutual funds also have not been able to roll over their commercial papers simply because they have faced a lot of redemptions. So that's where we begin our chat with our experts, P.K. Gupta of State Bank of India, K.V.S. Manian of Kotak Mahindra Bank, R. Sivakumar of Axis Mutual Fund, and Neeraj Gambhir, formerly of Nomura and before that ICICI, but now an independent expert. Well, once again, let me start with you, Sivakumar. The big number that rattled the market over Monday and Tuesday this week was that mutual funds saw an outflow of 2.1 lakh crore from their liquid mutual funds in September. Is any of it coming back anywhere near the pace it came back in early September or early August?
Yeah, I don't think so. I think August was extraordinary. I think we saw the number of about 1.7 lakh crore net inflow and then a 2.1 lakh crore net outflow in the month of September. So cumulative 40,000 crore seems normal. But no, I don't think we are going to replace that in a big hurry. I think there is going to be some, of course, flows are positive, and we have seen inflows come in this week relative to end of September. That's to be fair. But having said that, I think it's lower. There is some amount of concern, and I think especially with a lot of corporate and institutional clients, it will take them some time before that flow comes back in full strength. Okay,
Mr. Gupta, actually what hit headlines was not just this 2.1 lakh crore, but that State Bank also liquidated about 17,000 crore in late September. Do you see banks like yours putting back the money in liquid mutual funds?
No, I guess some of the money will go back to the liquid mutual fund. So what we redeemed in the last week of September, and that is something we do every quarter. So this quarter was no exception.
Sure.
But at the same time, if you look at the overall system liquidity is surplus actually. I don't think that the system is actually short liquidity. It was just a question of ALM mismatches of some of the NBFCs. Not everybody in the market actually has a liquidity problem actually. So it's a question of liquidity, people who have the liquidity flowing it to the guys who really need it actually.
No, but Mr. Gupta, with the Reserve Bank announcing 36,000 crore OMOs even before the month started, for banks like yours, which are, more than well placed on SLR, it should not be a problem, isn't it, liquidity? So do you see your, public sector banks, for instance, large banks like State Bank, putting back the 17,000 crores or anything near it?
Yeah, I think some of it has already gone back, and more of it will flow back actually. I think it's a question is, since there is a scare in the market, so you need to really satisfy yourself about what kind of investments each of the funds have done actually, it's what their books look like actually. So we'll probably do a little more due diligence, but most of the money will go back. I don't think there is any concern as far as that is concerned actually.
Will it go back in October itself?
Yeah, it should actually. It should go back actually.
What about you, Mr. Manian?
So, I mean, some of it has already gone back also.
Okay,
I don't think that we are right now in a ill situation. Yeah.
Okay. What about you, Mr. Manian? I mean, Mr. Gupta's initial reaction is, we want to do due diligence before I put the money. What about you?
Yeah, no, so I think this will be a gradual process overall for the industry. I don't think money is going back tomorrow, because I think while what you said about this announcement being positive for the market taking comfort is all right, but I think people who have moved money out aren't going to take it back immediately. I think it will be a gradual process over the next 1 or 2 months. The way I look at it is next 30 days are important, and I'm an optimist. I do believe that this hump will be seen through by the market, but I'm also therefore the way I look at it is it's a 30-day window. If no accidents happen in 30 days window, money will start coming back into the mutual funds. So I don't see it overnight returning. I think next 30 days are crucial, and hopefully we don't see any accidents in the market in the next.
Okay, since you repeated that word, that's what stuck in my mind. If no accidents happen, you know, in the Neeraj, when we first started reporting about the debt squeeze, it started feeling like 1999. It started feeling like the C.R. Bhansali period, where, of course, I think thousands of NBFCs went under. Now, clearly, it looks like it's not an action replay of 99, right? Can we go with that hypothesis?
I think we need to realize the fact that non-bank finance sector is now a very, very significant and important part of domestic financial system. You know, I gave you some numbers, 22.5 lakh crores worth of total balance sheet size of NBFCs. Compare that with the size of total bank lending, which is 75 lakh crores. Compare that with the mutual fund industry, which is another 22 lakh crores. So you can't say that NBFCs today can be brushed away that easily. The second thing that I think one needs to keep in mind is that over this period of time, Reserve Bank has been taking a lot of actions to tighten up the guidelines and the regulatory norms. The CRAR of NBFCs today stands at 15%, which is probably highest in the entire financial sector. While there are ALM issues, but there are existing ALM guidelines which sort of limit the extent to which they can carry these mismatches.
So do you think, I mean, as Manian was worrying, can an accident or some accidents happen?
To me, the main cause of accident would have been a perpetual loss of confidence over the sector, rather than the real issue in the asset quality of the sector, because a lot of these NBFCs are retail, right? So to the extent we are able to address the crisis of confidence by the statements like the State Bank has made and some other regulatory actions, I would think that it's highly unlikely that we will see the kind of scenario that we saw in 1999, where NBFCs are falling like 9 pins, right? And I'm hoping that is not the case, because in this, if that is the case, then probably the damage to the financial system is going to be a lot more significant and severe, and I hope we are able to avoid that.
Is it only a hope, or are you pretty sure it's not 99 at all?
It's, never say never. Being in the markets, you learn to live with these kind of situations, but my guess is that this time around the situation is a lot more controlled, and I think there is a realization across the system, both in the players as well as in the regulators, that this is a sector that cannot be just kind of left on its own, right? You need to sort of make sure that these things don't happen.
Okay. Oh, well, very quickly, I believe I have only 3 or 4 minutes, so 1 minute per guest. Do you think, therefore, the special dispensation that everybody was wanting from RBI or, some back-to-back refinancing, that need is gone, Mr. Gupta?
No, but I think what this particularly does is that the loan portfolio does give them the long-term liquidity. See, even if the money was to go back to mutual funds, or if we were to actually invest into, say, 3-month CP of the NBFCs, so the problem would have been solved only in the short run.
Correct.
I think by taking these portfolios off their books, NBFCs will have much more breathing space actually. They can rework their strategies and then they can plan for the growth later on. And I hope that in the meantime, this ALM guidelines, which the RBI has been talking about, will also come, and maybe then the re-strategization can happen actually in this entire space.
Okay. No, very quickly, Mr. Manian, what happens? Banks are going to cherry pick the best loans and take them. Do you think the NBFCs who have seen some of their loans sold off will be able to raise, equity with the remaining? Because everybody will suspect that some of the sour limes have been left behind. Is there not a bigger problem in the medium term?
No, Lata, if you look at the broad industry data, I don't have the data off the cuff with me, but the NPA ratios gross NPA ratios are of the order of 2 to 3%.
Yes.
Maybe 4. So therefore, there is 96% of the assets which is good quality. So I don't think the bankers are today going to buy probably 5-10% of that asset. So I don't see that as an issue, one. Two, just to repeat what Neeraj said as well, I agree that I think the current situation is very different from that time. There's one more point I would like to add. the NBFCs today are far less dependent on retail public deposit than they were at that time, apart from the other points that Neeraj mentioned. So that also is a big difference. That also causes less panic. So I do see the situation to be different from the earlier situation. And the last, I think this is also an occasion for the regulator and the NBFCs to look at their ALM policies more closely, because you know data that has been floating around 8 to 10% of their liabilities being funded by CP and short-term liabilities when their assets are relatively longer is probably needs a relook at from their side.
Shivakumar, I can only permit you a monosyllabic answer. Normalcy in 1 month or 1 quarter?
One quarter.
Okay, thanks for that. That's not very encouraging, but still, 1 quarter is better than 1 half. Neeraj, anything that the regulator should do now?
I think one needs to look at two things. One is, in my opinion, one needs to look at the amount of short-term liabilities that NBFCs are allowed to carry. And second, whether there is a requirement to have some kind of liquid assets on the balance sheet. Because to me, these situations are always about liquidity rather than the asset quality. So if you address liquidity, then you take care of the survival of the sector.
Yes, so if they are forced to keep some kind of an SLR, which means it'll be a permanent ek haath de and then ek haath le, you get perhaps...
I'm not saying force, but I think realization that you need to have some liquid assets on the balance sheets, which then help you tide over these kind of crises.
And those guys who have that kind of liquid assets actually
will probably be much better off in this scenario.
Better. Okay, well, at least I think the most optimistic answer is that in a quarter things are going to return to normal. That's what we've got from our participants here. Mr. Gupta, Manian, Shivakumar and Neeraj Gambhir, thank you very much for joining me in this conversation, which makes us all feel that the crisis is ending.